Hi friends, I hope you're all doing well. I am back with another detailed market analysis, and in this video, we'll be showing you the bigger picture of what's happening. While I've been sharing short-term updates with you consistently, today's focus is to zoom out and understand what's really going on with Bitcoin and the altcoin market in the macro view. Let's start with the short-term setup, which hasn't changed much lately. Right now, on the 4-hour and daily time frames, we're approaching the key resistance zone between 86,000 to 88,000. As long as we don't get a proper daily close above this zone, the market structure remains bearish on the short term. That means we might still see rejections or retracements from this zone. Until this zone breaks decisively, you should stay cautious and trade level to level with a defensive mindset. Now let's talk about the bigger picture, which is really important, especially for those holding altcoins at a loss. Understanding the macro structure helps you know whether Bitcoin can make a new high and whether your altcoins are likely to recover. Let me switch to the weekly time frame, where we can better understand the long-term structure. Demand zone. The major demand zone lies between 65,000 and 73,000. As long as this zone holds, the overall bullish structure of the market is still intact. 50-week moving average MA. This moving average has historically acted as strong support during bull markets. Even during the 2021 bull run, when Bitcoin dropped 50%, the 50 mA still held. It only broke once we truly entered a bear market. Right now, Bitcoin has once again retested but not broken this MA, showing strength and potential for another bullish reversal. There's also a harmonic reversal pattern that aligns with this same demand zone and the 50 mA. This triple confluence, harmonic zone, demand zone, and moving average, indicates that the current area is a strong reversal zone. If Bitcoin remains above this macro demand zone, there's no immediate reason to panic. Even if we see another drop or retest, it's likely just a liquidity grab before the market begins a true upward reversal. However, if the demand zone is lost, then yes, we could see a deeper correction. Let's go back to the daily chart for this. Since Bitcoin broke below the 92,000 level, the daily trend has turned bearish, forming lower highs and lower lows. The key resistance remains that same 86,000 and 88,000 zone. If Bitcoin breaks and closes above this zone on the daily chart, it would signal a trend reversal. Any retracements after that would likely be shallow. That would confirm a stronger bullish trend returning, not just for Bitcoin, but for altcoins too. Please don't mix short-term analysis with macro analysis. Short-term updates are meant to help you with scalping or level-based trading. Macro updates guide your investment decisions and help you manage your long-term altcoin positions. Like Bitcoin, the daily structure here is also bearish. Lower lows, lower highs. The market is struggling to break above its own resistance zones. Unless these key resistance levels are broken, a proper altcoin recovery isn't likely to begin. So, to summarize, the macro structure is still intact. We're sitting in a strong reversal zone. A true bullish move could start once we break above 86 and 88,000 on the daily chart. Keep your trading strategies aligned with the time frame you're focusing on. Drop your feedback in the comments. Let me know if this macro analysis made sense or if anything wasn't clear. Until next time, stay safe, stay smart, and may your trades be profitable. Happy trading!